Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So, came in today, no one knew what to expect, right? You had the biggest down day of the year yesterday, big time, wide-ranging golfing bars that took out the 8 and 21 day in so many different sectors, so many accelerated trend lines broken. So, not a bad idea to reduce risk across the board. So, that's basically what I did yesterday, and I actually went home a little bit short. So, my process and plan today was, hey, if we open up in the hole, after 40 handles to the downside from the highs, why not look to buy some with the plan by using yesterday's low as a pivot? So you could buy versus a 15-minute low, add above yesterday's pivot, and then figure out where you could ride it to and then sell into resistance and then figure out what's next. Because just because we rallied today doesn't mean that this corrective phase is over. And just because we took, a huge wide range bar engulfing move yesterday doesn't mean we're going to go down 7, 10, 12, 15%. But as traders, it doesn't matter as long as you have a plan on how to, figure out whether to, put on some longs and then see where they can go and then maybe even re-short after an oversold bounce. So anyway, let's just get right to the charts. Here's your S&P cash. All right, overall, this was the broken trend line that we talked about right there. Okay, so all in all, from 2,400 down to yesterday's low of 2,356. You didn't have much risk here, guys. It was down 6, 7 handles this morning. You could have been a buyer this morning. Then once it took back 23.56, you had to stop at 23.52, and it was as high as 23.75. That's what is that? 19 handles with like 3 handles of risk. So if you go to the spiders, because a lot of that's what you guys trade intraday, basically you followed me on the VTF. That's pretty much where I was really focused today because some of the high beta tech names were already green when I wanted to get into them. So anyway, with that being said, this morning, I did put on the note. And I also put on in the actual language of the chart saying I was covering at 235.25, which is below where we opened, and I was looking to buy some in the hole, and when it reclaims 235.75 for a move back to retest this area. Okay, well, went there and kind of that's exactly where it stopped. I thought maybe first stop would be the 50-day, which it powered through, and now we'll see how long does it stay on the right side of this trend line. Because the longer it stays on the right side of the trend line, the more prone it is where it could roll over. So at this point, who knows? Maybe you get a little bit more tomorrow or not. But you did have a really nice trade. If you sold when it broke here or you got out yesterday, today, after a little price discovery, you had a chance to get back in. You look at the 5-minute chart, I'll show you how you could have executed on a quick tactical, method. All right, so here was that low. Here's your, your 235.75. So basically, in the first 15 minutes, it was hanging here. So you could have been a buyer versus the low. What was the low here? The low is 235.43. Okay, and then it's trading like 235.50ish. So you could have been a buyer versus that. That's your tier 1. So basically, you could have been in with limited risk. And then here is when it went through the 235.75 for the first time, and that's where you literally had to buy a lot. And I bought a lot right here. That was what I was focusing on. I got to tier 3, sold some, held some, sold some, stayed with tier 1, came back in, bought here, versed the low, and then all of a sudden you had your follow through in the afternoon. Okay, so basically here is your buy, tier 1, tier 2, maybe sell some. Back is, you could add right here. You could have waited for it to break this descending trend line, and then boom, came right back into, some resistance from the prior day. And at the end of the day, I was actually trying to buy a little bit, and I still have some overnight. We'll see what happens. But all in all, that was your spider trade. Calculated, doesn't look like much, but that could have made you your money today. Same thing happened in the IWM. You could have used yesterday's low, which we all talked about, which was 134.75, which was right there. So same kind of thing here. Bottom tail came up. You buy tier 1 versus 5, 15, 30-minute low. Add when it gets through the pivot point. Gave you a quick move. Came back, retested, and then went back into resistance, and that was your quick little, day trade. This was 12 o'clock, half a day. You could be out digging ditches, on the telephone, doing whatever, and this is a little bit easier to handle versus those type of days. So as hard as you think today was, try a different profession. It's a lot harder to make, a calculated money the way you could have made today by positioning in even just the IWM or the Qs. Then we also talked about how high beta tech, in the morning call, I'm like, oh, Facebook's down 80 cents. I want to buy it at the 50-day. Apple's down 50 cents. I want to buy it at the 21-day. I think they at least go red to green and bounce. They actually had a lot more than that. Facebook, by the time I friggin' walked back to my desk, was already green. Okay, so here is the low. It opened up above it, and then boom. Okay, and then it came up into the resistance from yesterday, and then then blew through that before coming in, retesting this spot, and then giving you another move. So why was I excited about Facebook, even though it's been dead since earnings? Because the 21-day moving average was basically right here, and didn't really give you the chance to buy it unless you were buying pre-market. And now you have this little 2-day range here, so maybe we'll see if it goes sideways and pops above it or not. But today was a day to kind of get aggressive there. Amazon was down 4. By the time I walked out of the morning call, it was up 3. This too probably came back faster than the bears would want, I would think. Matched the prior day low, already back up to here. So now with some time, this seems like it's back in the game. So the bulls took some of these stocks right back to a level where they're in the game for for constructive higher prices. Because if it wasn't, you would have seen Amazon, that was down a lot yesterday. It could have went from down 4 to up 3 and stopped. Instead, boom, okay, engulfed all of yesterday's action. So that still shows that there's appetite for risk there, at least. Google did a little bit of the same, where not as feisty of a move, but it did what's it called. Did match the prior day's low, gave you a little bit of a trade, and now we'll see what happens here in this channel as it goes sideways. The XLF, I don't think there's much action there. At this point, still couldn't really, bounce, but also from coming in from this spot here, okay, it didn't have enough power to get below here as it tried all morning. So see if it hangs out below these moving averages. If it does, maybe it continues to the downside. So this would be resistance here if you need to try and short a bounce. And if it's going to break this spot, it should take the market with it, but that remains to be seen yet. Some of you guys were looking at Netflix was down $1. It had a decent move. So really, all that happened today is, you had these broken trend lines and that some of these held the prior day's low and rallied back up. And now you're going to figure out, does it stay on the right side of it and then fail? Or does it stay on the right side of it and then break above? We shall see in coming time. What else? Tesla, had a bit of a bounce today. Took back yesterday. This too, broke below this spot and then didn't get below. So all these high beta names, by the way, did not get below yesterday's low. That means everyone who went home shorted, who was looking for a little bit of a move to the downside to cover, had to kind of chase it today. And they all came back to match the prior day's high. So we'll see if these lower pivots develop in order to get another entry in, or if they start putting lower highs and then break lower. So that's the type of trade we're looking at moving forward. Again, the spiders, which is where I focused, all it did is come back and retest what's it called, the moving averages that it broke. Granted, this actually started lower, so at least if you sold here or somewhere in this mess, you had a calculated buy after some price discovery. But if it goes on the side of this for a little while and can't get back above that, chances are it could roll down. So we shall see. Okay. If you remember, this was kind of very similar here, right? This one broke the trend line, came back, gave you a red dog reversal, and then came back into the broken support that turned into resistance, came back down, came back up. Then you had this descending channel. Remember this was a false breakout, made a new low, and then all of a sudden created a bigger pivot, and that was your French gap up move. So lots of different ways to look at all these lines. Hopefully, it makes some sense to you. XLE, still trapped in this descending channel here, not helping the broader indices much. Still below the 50-day, but I guess still above. This did make a new low, or a low on the month, the way I guess the S&P did. So who knows? Maybe that means it's going to act a little bit better, but it still has a lot of work to do. So all in all, today, I came in a little short the spiders, covered pre-market like I tweeted, flipped, had a good day, involved with them. There were lots of levels to be involved. You could have, bought that pivot point, which was what, 235.75, and played it for 75 cents to the 50-day, and then once it came off and proved it could hold up, you had another move later in the day up to that 237.75, and then pulled back towards the end of the day. So still some room to go back and forth. We'll figure out what's next at this point. It doesn't mean correction is over, but it also doesn't mean that you can be blindly short. But what it does mean is, with the proper plan, with the proper pivots, you could definitely make some cash flow and put together a month without holding 6, 7, 8, 9 positions if you feel as if we're going to be in a volatile stage, which we could be. But for today, you could have got some really good prices, and you could have made some quick, fast money in the first 15 to 30 minutes, and then it also gave you a second move before that end of the day grind down ahead of Trump's talk, which he's talking right now. So we shall see. Either way, let's keep moving forward. Let's keep these feet quick and fast, and keep staying prepared, because that's the only way you're going to make a living in this market, and it's the only way you're going to have longevity. I wish everyone the best. Tomorrow I'm in Short Hills. I will tweet out a few of my thoughts in the morning, but you know the drill. Monday through Thursdays, Morning Call Express and recap, and on Fridays I'm in Short Hills, and I trade 2 miles away from my office versus the 4:45 wake up. Have a great night. Happy Thirsty Thursday. It's hot out there. Get some fluids in you, and I'll see you tomorrow. Bye-bye.